With the inflation soaring to its all-time high over the past 30 to 40 years, many investors are worried. While stock market investing can be quite lucrative over the long span of time, it does come with its own volatilities, and some investors may not be able to stomach those uncertainty, which is why investing more passively through less risky options, such as investing in the government bonds or high quality bonds, fixed income, may be a good option for some investors. And in this video, that's going to be our focus. We're going to be talking about 9 high quality bond ETFs that allow you to get exposure to investing in fixed income assets at low cost. And these are all offered through Vanguard. So let's get into it. The very first pick for us is Canadian long-term bond index ETF with ticker symbol VLB. It has the last trading price of $25.02. In the last trading day, it was up by 0.28%, though you notice from the graph how the prices of this ETF has changed over time. It reached its high around August of 2020, closer to $31 or $32, but since then it has definitely tanked. And you notice how since late December, definitely the price has gone down quite extensively. It does have a trailing 12 months yield of 3.19%. That is the indication of what an investor would have been paid over the last 12 months as a percentage of the most recent value of this fund. Had you bought it 12 months ago, based on today's price, how much of a yield or distribution dividend you would get. VLB does pay its distributions on a monthly basis, and it has an assets under management of $52.8 million. The expense ratio, management expense ratio here is at 0.17%. What this fee entails is that if, for instance, you invest $10,000 into VLB, you would be paying a fee of $17 on that amount invested in a year. Next, we have another Vanguard ETF, and that's no other than VGV, or Canadian Government Bond Index ETF. It has the last market price of $24.45. It was up 5 cents or 0.23% in the last trading day. The management expense ratio here is slightly higher at 0.20%. The 12 months yield for VGV sits at 2.44%. And similar to the other ETF that we saw, the distributions are paid here on a monthly basis. Similar trend, though, when it comes to looking at the trading prices for this ETF, VGV, as you notice. It has $53.8 million assets under management for VGV. And the 52-week price range is showing a change of 7.17%. Let us take a look at our third pick, which is VCB, Canadian Corporate Bond Index ETF. It is last traded for the price of $24.62. The management expense ratio here is at 0.19%. The 12 months yield distribution for VCB is at 2.78%, and the distributions are paid on a monthly basis. VCB has $206.2 million assets under management. Our next pick is VAB, or Canadian Aggregate Bond Index ETF, for the trading price of $24.67. It has the lower management expense ratio of only 0.09%, and the 12 months yield distribution is at 2.57%. Similar to all other ETFs that we've looked at so far, the distributions are paid on a monthly basis. VAB has the largest assets under management so far of the ETFs that we looked at. It has close to $3.4 trillion in assets under management. Next, we are looking at VSB, or Canadian Short-Term Bond Index ETF, with a management expense ratio of 0.11%. The distributions here are paid on a monthly basis, and it's showing a yield of 2.04%. In terms of assets under management, VSB has $1.3 trillion assets. Next, we have VSC, Canadian Short-Term Corporate Bond Index ETF. It has a 12 months yield of 2.61%. Distributions are paid on a monthly basis, and the management expense ratio is at 0.11%. Its market price, last trading price, was at $23.85. So far, all these ETFs that we've looked at are hovering close to $25 or less in terms of the price per share of the ETF. Assets under management here is at $1.3 trillion. Next, we have VBU, or US Aggregate Bond Index ETF. It is hedged for Canadian dollars and available in Canadian dollars as well for investors. It has a last trading price of $24.69. Its management expense ratio is at 0.22%. Distributions are paid on a monthly basis, and the 12-month yield sits at 1.79%. Assets under management here is at $844.7 or $8 million. Next, we have Global Aggregate Bond Index ETF. This excludes US. It's hedged for Canadian dollars with ticker symbol VBG. Its trading price last was at $25.75 and has a management expense ratio of 0.38%, higher management expense ratio compared to the rest of the bunch. It has a 12-month yield of 2.92%, and the distributions are paid on a monthly basis. Assets under management for VBG is at $646.5 million. Next, we have Global Aggregate Bond Index ETF, hedged for Canadian dollars, has a management expense ratio of 0.34%. The 12-month yield for VGAB is at 2.33%, and its distributions are paid on a monthly basis. Assets under management are at mere $59.4 million. And the last trading price for VGAB was at $23.84. There you have it, folks. A quick look into 9 different high-quality Vanguard bond index or bond ETFs. All of them are actually index ETFs. We are going to take a look at their performance and compare them here on the screen. In this table, all of them are shown next to each other based on different rows. You notice first and foremost, the first column that I'm highlighting is the 1-year return. All of them are showing a negative 1-year return. And while this can be disappointing, keep in mind the prices of the bonds really depends on kind of have a reverse correlation to that of the stock market. When the stock market tends to do a little bit better, the bond market tends to do worse. But at the same time, the bond market can be less volatile overall. And in many cases, when you look at it longer term, the returns over the long terms are hovering probably close to that 2 to 3% mark, a little bit more stable overall, perhaps not the highest gains, but at the same time, they do pay that higher trailing yield. The way I think about it is that, say, if you have some large sum of money and instead of wanting to keep it in, let's say, the bank accounts, and perhaps at most they pay you perhaps close to 1% or maybe 1.5% in interest, which is less than that of the inflation rate at this time, you could consider perhaps parking some of that money into a bond index that pays you a larger yield, like hovering anywhere between 2 to sometimes even 3.5 or 3%. At kind of a minimal fee, not always the lowest fee, but at the same time, a decent fee, is not as high as in mutual funds. And over the longer term, it does pan out to be okay investment in a sense, because look at that. For example, over the 3-year, the annualized returns are turning into the positive return, or the 5-year annualized return again turns positive, or annualized returns since inception are also positive. They're not going to necessarily make you rich in a sense, but it's a good passive investment option to save some of your funds and kind of tackle the high inflation rates that we are facing right now in the overall in the markets and in the economy. I hope you found this video beneficial and gained something of value from it. I will leave a link to this page, this kind of table, where you can see and navigate through it more in details and understand exactly how their performance has been, and they compare them together. If you gained something of value from this video, give it a thumbs up and share it with someone who might benefit from the video as well. And don't forget to subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, whether it's investing in the stock market, bond market, cryptocurrency, and real estate. And we also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.